Welcome back. We are awaiting the delayed November jobs report. Economists are expecting 50,000 jobs created for the month, with the unemployment rate holding steady at 4.4%. This will be a market mover because it will educate or inform market participants on what the Federal Reserve's next move is. Joining me now is American Staffing Association board member Joni Biley, Job Creators Network CEO Alfredo Ortiz. Also with us this morning is Charles Payne, Mitch Rochelle, Lee Carter, and Cheryl Casoni. Great to have everybody. Thank you so much for being here. And Mitch Rochelle, let me kick this off with you here. We heard from Charles a moment ago. Your thoughts on the importance of this report and what specifically you're going to be looking at when we get this November jobs number.
Well, there's going to be a lot of data to unpack, Maria, but I have a feeling this is also the holiday season, especially November, and the retail sales number, which we're also going to get, I think is going to be higher than expectations. So I actually expect that the jobs picture is going to be better than expected, but we may also see the unemployment rate tick up a bit. And if it does, that would be the highest level in unemployment since 2021. So I think there's going to be a lot of data in there. It's going to be tough to parse through, but we got the right team to do it.
You know, Charles, one thing that I want to look at is wages, because the president, and you just heard Scott Bessent say it as well, the Treasury Secretary told me that he's expecting wages to go up in the first and second quarter of the year. Your reaction?
Yeah, Goldman put out a great piece about a week ago showing that every all the quartiles are going to go up, particularly the middle class. And so we are going to see strong wage growth. But you know, the question is, how will that be offset with job losses? Because we have attrition going on right now. So you don't see it in the initial jobless claims. That's sort of useless in terms of measuring this economy. However, people are losing their jobs. Companies aren't rehiring, but they are probably going to see we're going to see big time wage growth next year, 2026. I'm a little bit ahead of myself.
Well, look, we're looking at wages because that's a key metric when you want to talk about this affordability crisis. And Lee Carter, you've been talking about it a lot this morning. The fact that you believe people are stressed and feeling stressed.
Yeah, you know, there's so much data out there about how people are feeling, and I think there's a big gap between what's really happening and where people are feeling in this moment. So we know that only 30% of Americans are satisfied with their wages right now. They feel like they're not making enough money to make ends meet. 60% say that they can't afford the things that they really they need and they want. And then when you also look at the prospects of people saying, like, can I find a better job that I'm in the place? Only half of Americans right now feel like they could find a job that was better than where they are right now. And that's up significantly, 20% over the last 2 years, where people are feeling more stressed about being able to find the right position for them. So the idea that wages are going to go up next year is a key metric and how people are going to be feeling, because right now they're not feeling very good.
All right, we're waiting on the numbers. It'll be out in about 20 seconds. Real quick, Alfredo, where do you think the jobs are right now?
Well, right now, especially for small businesses, I think in the service area, for example, bars and restaurants, there's actually really strong growth there, which I think is an indicator really of how our consumers are starting to feel now. I think they're feeling the tariffs behind them. Things are kind of stabilizing. Prices are stabilizing. They're still high because of the Biden administration put us there. But Trump, through a lot of his pro-growth policies, have really stabilized inflation.
Yeah, markets are turning around here. The numbers are hitting the tape. The Dow Industrials right now up 39, going from negative to positive. Cheryl Casoni with the numbers right now. Cheryl.
So the non-farm number for November came in hotter than expected, 64,000, better than expected. Let me change my phrasing there. We also had the unemployment rate tick up to 4.6%. As for the other numbers within the employment report, manufacturing, we did lose 5,000 jobs in manufacturing as expected. The private sector job number, 69,000. That is much better than expected. We were looking for 45,000. Not as good as the last time we got a report, which was September. Looking at factory jobs, again, that loss of 5,000. We saw government jobs, a loss of 5,000. Let's get into wages and earnings here, because what we're seeing as far as average hourly earnings, 0.1% to the upside. That is not quite what was estimated. We were looking for a gain of 0.3% on that number. The U6 rate, 8.7%. Also, looking at labor force participation, which is something I was kind of looking at as far as who's dropped out, 62.5% there. We do not get an estimate for that really quick. Let me go into exactly, because there's going to be a lot of footnotes in this number, and I'm really wondering what revisions are going to look like. But as far as what the government is talking about, there's a lot of caveats, in here. Again, this has stats from 2 monthly surveys. We're getting a piece of October and then all of November in here. Where the jobs are, healthcare and construction for November. Again, federal government jobs continue to lose steam. That is according, of course, to the government. Also, talking about those that in the labor force that wanted a job, marginally attached labor force, 1.8 million in November, and that was actually little changed from the month of September. So again, looking at a story that is better than expected for the markets. A weaker report would have maybe had a better market reaction because you all are having that Fed discussion. I need to dig into the retail sales numbers, but what I'm seeing right here is that month over month is what? Excuse me? It was flat. That's what I saw. Yeah. Okay. Up, ex-autos up 0.4%, better than expected on the retail numbers. 3.5% year over year for retail sales. So, Mitch, I hate to tell you, you were actually wrong on the retail sales number. We were looking for a gain of 0.1%. We came in flat. A year over year gain, ex-autos 0.4%, and then, ex-autos 0.4% to the upside, 3.5% year over year. There's a lot of context and report in this November jobs report, Maria. I'm going to go back into it right now.
Thank you so much. Charles Payne, the market is up 52 points. Give us your translation of this positive market performance on the heels of a better than expected
If I had to
jobs
zero
number.
in on the knee-jerk reaction, it would be the 4.6 unemployment number. It wasn't long ago, I think Jay Powell told us 4.5, 4.6 is sort of the red flag at the Federal Reserve.
Bingo, that's it.
Yeah, and of course, Powell had pushed back on the notion of jobs until last week. The FOMC, ironically, he actually said the data coming in might be too high, that it might be, he suggested it's overestimated. So he's starting to maybe come to grips with the fact that his treasured government data is somewhat flawed, but still 4.6 is probably the number moving the needle right now.
This is the highest unemployment since September of 2021. And Joni Biley, we heard a lot from Treasury Secretary Scott Bessent this morning in terms of the job opportunities that he's expecting in 26, from construction to electricians and plumbers, et cetera. Where do you see the jobs right now?
Yeah, Maria, the jobs right now are truly in healthcare. If you look at this report, you can see 69,000 jobs in the private sector, and most of them are coming from the healthcare sector. Those are the top jobs in demand right now. If you look at even the top five.
That's been the case for about 8 to 10 years. Just saying. Okay, 10 years ago, I was telling people we're going to need millions and millions of new nurses because we're living longer and wellness, et cetera, et cetera. This has only deepened with technology, the marriage of technology and healthcare.
Absolutely. And I've been on your program probably for 10 years also saying the same thing.
You're right.
You're absolutely right.
Yeah.
Healthcare is going to continue to grow. What I do think that we will see in the future, in 26 and 27, is we will see jobs come back in the trades, transportation, we will see construction, we will see manufacturing. It is good to see that the construction sector did add 28,000 jobs for this report. So most of the jobs in this report are really healthcare and construction. There's a lot of other concerns. There's a lot of negatives. If you look at the data and kind of go down the list of the sectors, I wouldn't say this job market is collapsing by any means, but it definitely has softened over this year. And the jobs that exist today are more precise in those positions of healthcare. The technology sector also has jobs, but it's really jobs in data science, analysis. You're also seeing some roles being eliminated, and there just isn't as much of a demand due to AI. Yeah. So we definitely are in a time of shifting right now.
Yeah, I mean, the labor market is shifting, and we're seeing that in the numbers. Cheryl, you've got the October numbers as well.
We got October non-farm payrolls data. We saw a loss of 105,000 jobs non-farm for the month of October. Private payrolls for October coming in at 52,000. We will not get a rate, to be clear, but there's one caveat, context to this October number. because of DOGE. A lot of those government workers, about maybe 100,000 or more, they were going off the government payrolls as of October 1st. I think that's an important caveat to remember here.
Well, I mean,
because the private sector saw strength.
It is an important caveat. You're right, but I also think that we have to consider, Charles, what the administration is saying about the first and second quarter. Okay, we're talking about expectations of wages going up. We just saw that in this report. We're talking about expectations of growth going up. Kevin Hassett was on this program last week saying he would be disappointed with a 3% growth number in the first half. Charles.
No, I agree. All the pieces are there. There's no doubt. No one disputes that. Every firm on the street acknowledges that all of the great things that they fought for. You know, listen, there's one thing, the messaging and people wanting this to happen instantaneously. It does not happen instantaneously, but all systems are go. And everyone anticipates it's going to be better. You know, some of these big pledges, these factories being built and being brought over. It was ironic because 2 weeks ago, Bloomberg took a shot at the administration, says Trump's $21 trillion number is absurd. It's more like $7 trillion. $7 trillion is a pretty good number. Wow. So
No kidding. Yeah.
Yeah, like you might not have dunked on him the way you thought you did, but still, you know. So listen, this tells us a few things. The construction number stands out a lot. Obviously, healthcare, to your point, that's been an issue with the aging economy. Hourly wages, that's another reason maybe why there's a knee-jerk move higher, because the Fed, for some reason, they're so fixated on wages being a driver of inflation. I'm not necessarily in that camp. I hate the idea that the Federal Reserve has the power and would, you know, always wants to clamp down on the economy when Main Street's getting a raise.
Well,
hopefully that won't be the case in the new Fed.
And that's why Jay Powell and the Fed has been criticized so much. Yeah. All good news is bad news for these guys. Yeah. I mean, every time we have good news, it's like, oh, well, we better slam on the brakes and reverse it. That's not the way Kevin Hassett sees it. That's not the way Kevin Warsh sees it. Mitch, weigh in.
What's clear is the Fed took their eyes off the ball on their dual mandate, which is to strive for full employment while, you know, slaying the inflation dragon. And that's what's coming home to roost. Now, a couple of things. We had a government shutdown. We had the DOGE. So the numbers are distorted because of that. But at the end of the day, we need to create more jobs, and we're not. The industries that are creating jobs, like healthcare, are actually creating lower paying jobs because they can't sort of find doctors overnight. They can't find skilled nurses overnight. And they're sort of flooding the system with sort of lesser skilled helpers. And those are lower wages. So I think there's a lot of cracks in the labor market. And the best thing the Fed can do is lower rates and create supply-side incentives.
Well, Cheryl just told us that October was revised. I'm sorry, their October numbers were lower, 105,000. And you've also got the non-farm payroll revisions for August and September. Revisions to August and September show 33,000 fewer jobs than previously reported. Lee Carter, that's possibly why going into the midterm elections, this issue is getting more important and more important. These efforts by the administration to raise wages, to, you know, rein in inflation, do these messages get out in time and have an impact before the midterm elections?
I think that there's a couple things. One, I think it's going to take time, but I think Americans need to be reassured that it's going to take time. I think they need to, instead of saying things have never been better, things are going to be okay, I think they need to say, these are the indicators, it's going to get better, bear with us, here's the things to come. You know, more than half of Americans right now are concerned that they're going to lose their job. There's people who are feeling a lot of financial stress, and I think we need to go a long way to reassure them. We're on the right path and things are going to get even better. Bear with us. This is what you need to be looking for. I think that, you know, the messaging where they're doing right now, trying to set the record straight, talk about what's to come, I think that's reassuring. I think the interview you just did, if you listen to that, I think it's very reassuring to folks, but we need to talk about what's yet to come.
Alfredo, what is to come in 2026? Give us your sense of the jobs picture. Where are the opportunities? But even more importantly, what are people looking for? You've got that data at your fingertips in terms of where people are looking for opportunities right now. What can you tell us with wages having gone up in this last month?
Yeah, absolutely. If you look at the November ADP report, obviously there was a big hit for small businesses. I think this particular year in 2025, small businesses were a little weary with tariffs and other things that were going on. Remember that Biden took us at 9-10% almost inflation rates, so the prices are still high, What Trump has actually done is really stabilize those prices, try to bring those prices down on energy in particular, which is flowing through. And as deregulation flows through and tax cuts flows through, our small businesses, we're being told they're feeling good about hiring again. They're going to start hiring. They do see first quarter and second quarter. Remember, inside the one big beautiful bill, there was one piece that was huge, a game changer for our small businesses, which is really the immediate depreciation, basically for investments into their business. That was a huge benefit. So we're going to see that investment, I think, really kicking in. And I think they're going to see, they're kind of in that hiring mode now again. Going into the first and second quarter. And I think when you see those rebate checks, the $1,000, $2,000 that Secretary Besson was talking about, I think the consumer is going to feel more optimistic again, and I think overall they're going to start feeling better on terms of their spending. And so I really truly believe that our small businesses are going to be in that hiring mode once again in first quarter, and especially going into the second quarter. So I think overall we're going to see a lot of positive growth from that sector, which, remember, Maria, 33 million small business owners in this country employ almost 70 million hardworking Americans. And so if our small businesses are feeling good, that's really good for employment.
Well, those are the job creators. Absolutely. Small and mid-cap businesses. Joni Biley, you agree with that?
Yeah, I actually think that small business could generate a tremendous amount of jobs. And we're seeing, again, the impact of AI, that we're going to see a lot more entrepreneurs and people want to create opportunities and open small businesses. And there's a need there. But I do want to point out something in this report that I find truly interesting. And it's a little bit of good news, bad news. So I'll start with the bad news. We do see unemployment ticking up, of course, to 4.6%. And that means that there's 7.8 million unemployed workers in the U.S. Compared to November last year, we had about 7.1. However, if you look at the number of people that are employed, today we're at 163 million workers compared to last November at 161 million workers. So this is where you have more people working today, more people participating in the workforce today overall. And so, yes, we're seeing, unemployment tick up. But overall, I'm very optimistic that we're seeing more people actually participate in the overall economy.
Yeah, I think it was really interesting that Secretary Besson said that he sees he's expecting a substantial drop in inflation in the first 6 months of the year. Charles, he was very specific. He also said very specifically he's expecting rents to come down.
Rents have already started coming down, and you see it first in the hot cities and hot towns, so the Austins of the world. But now every week I see the list getting longer and longer and longer. What's interesting about this, and this is where I, classically trained economists, they always tell you anytime someone comes into this country, whether legally or illegally, it creates another job and it offsets. And that part, I can't get my head around this notion. That from a layman's point of view, it doesn't make sense, right?
Right.
But we do know that they do put a strain on society, particularly housing. And so, one of the side benefits of this has been you don't have to fight, for the housing. This allows rents to come down. You don't have extra people trying to bid up for a rent. Also, it allows wages to go up. For me, it's got a dual benefit. The success at the border and the economic implications, I think, are underreported in this country. And I think it's having a major impact. So higher wages, lower rents. That's what we want.
I'll tell you, I don't know what this report does for the Federal Reserve, Cheryl. I mean, as soon as you reported the numbers, the market popped. We had the major averages moving into positive territory for a moment. But now stocks are down again. And when I look at the number of revisions, when I look at the better than expected numbers on jobs, I mean, I'm still at the same place in terms of the Federal Reserve, that they are divided, that, yes, we're going to see rate cuts in 2026, but it's going to be because of a new Fed chairman. Yeah, not Jay Powell.
And you heard Jay Powell in his press conference say that he didn't believe that the BLS data was actually accurate. That's frustrating for market participants because the data is what the market relies on to make decisions about where stocks are going to go. And he said that he was thinking that monthly jobs gain, he believes job gains are being overstated by 60,000 jobs. Not a real vote of confidence for the data that we're going through this morning. I don't think we're really going to have a clear picture of the jobs data until February. January is always messy. We knew today's report was going to be muddled and messy and difficult to parse, and I think that's still the case for the market. So I'm not surprised that you saw back and forth in the numbers. As far as the Fed decision, I'm still looking at 2 cuts baked in for next year, but this Fed funds futures, and those are always a little volatile.
Well, it's one question that I constantly ask, Mitch Rochelle, and that is, if we're all expecting rates to come down in 26, why are short-term rates going higher? Okay, look at the 10-year today at 4.1%, Mitch.
Well, a couple of things. The shortest part of the Treasury curve is really the only thing that the Fed has control over. But what did the Fed do? And it sort of got lost in all these headlines. They bought $60 billion worth of Treasury bills. Okay, so the Fed is actually doing the opposite thing by pumping liquidity into the system. So I think the only real barometer of the economy is the bond market, and they're signaling that rates are going higher, and regardless of what the Fed does. Higher rates do nothing to help businesses finance themselves and do nothing to help the housing market.
I love the fact that, back in April, there was all this hysteria over the president's tariffs, and now the bond market wants those tariffs in place. Okay, every time you see any question about the president's tariffs, the bond market sells off. Okay, so Charles, let's get back to the most important decisions that we're waiting on for year end. Scott Besson just told us we're not going to get these decisions till early January, and that is, number one, what will SCOTUS say about the president's use of tariffs? All the arguments are over. That's it. I mean, we could get this decision imminently, but the Treasury Secretary just told us wait for early January. Will the Supreme Court go against President Trump's use of tariffs for an emergency? And how will the president, if they go against him, how will the president recoup all that tariff revenue? And number two, who will be our next chairman of the Fed, Charles?
Well, let's start with the chairman of the Fed.
Easy one.
I had a great interview with Neil Duda yesterday, and he said something very provocative. He said it's going to be Scott Besson.
I don't think so.
I know everyone doesn't
Scott has
think
about
so.
4 jobs on top of being the Treasury Secretary.
You might have to give something else up.
IRS commissioner. He just told us that we're going to get better refunds than we thought. He's got the data.
Rubio doing it all, right?
Yeah.
So, anyway, I thought that was provocative. In other words, because President Trump has put it out there publicly, privately, all the time, and he keeps waiting and waiting and waiting. And so. I think the key.
They're 2 very good candidates, Kevin Hassett or Kevin Warsh. These are
the
2
question
very high
though, is really like what happens,
impact
though.
guys.
The new role of the new Fed chair, though, is going to be different. And we saw it with this last FOMC, the 3 dissents, particularly from Fed governors. That's very unusual. I don't know, for lack of a better term, some strong arming, more persuasion, reel them in a little bit. They talk too much. They're out there talking too much. 2 weeks ago, Jay Powell gave a speech ostensibly for Joel Schultz in honor of him, but in my mind, he took 2 shots at his critics, one at Trump and another at the critics for how often these Fed members are out there publicly speaking. I think it's a mistake. They move markets.
And by the way, Powell wanted that. He said this was going to be the most transparent Fed.
Right. It's too transparent because now I feel like politics are playing a role. It's one thing if you say, I think the economy's hot, fine. But they're going deeper and deeper into pushing and pushing. Immediately after FOMC, the hawks came out, right? We heard from them immediately. Austin Goolsby's everywhere. And by the way, traditionally a dove, now he's a hawk.
Well, look.
But I'm just saying, Maria, the next Fed chair is going to have to really be able to have a different skill set beyond economics, beyond knowing business, and that's really swaying, even strong-arming people on the committee.
Well, fair point. But look, don't tell me that Kevin Hassett is going to be political just because he's in the inner circle of President Trump. Go back to Jay Powell when he first got the job, and his first instinct was to cut interest rates before a presidential election. When we're talking about, politics getting involved. And also, when he first got the job, he starts jamming through DEI policies all over the place. So if you want to talk about getting political, been there, done that. We've seen Jay Powell get real political.
How about Janet Yellen when inflation was happening and we all knew what it was because we're all old enough to remember inflation? She said it was transitory, which was the exact same soundbite that Jen Psaki was using from the podium. Tell me that's not political.
Well, there you go. They have this massive conference call.
Too. Yeah.
And they get the talking points. They get those talking points right. But Lee Carter, what are the talking points? What are the talking points for 2026 as you keep looking at all these polls that show people are stressed?
I think the talking points are the right ones that they've been talking about. It's talking about wage growth, lowering costs, affordability, and I think it's really important this administration gets the messaging on health care right.
Yeah, and Joni Biley, how important is this health care issue, do you think, for would-be workers?
Yeah, I mean, healthcare is a huge issue, obviously, from a cost perspective, access to healthcare. And, we're going to see, obviously, the sector, of course, continue to add jobs. There's more demand than there are qualified people. So this is one of, the hottest areas that all eyes will be on in many different aspects of it. When you look at the overall job market, Maria, I think it's also going to start looking very different in 26 and 27. We're going to start to see these lower wage jobs really start to disappear because of the impact of AI and technology. And so there will be job growth and they will be higher paid positions, but we need to get our workforce ready for these jobs. They need access to skills, to learning, upskilling opportunities, AI training. So there's going to be this shift on how the labor market actually is made up in the U.S. And I think we're going to start to see that as soon as 2026 and certainly into 27.
What do you think, Cheryl? Because President Trump has been talking about trade schools and things like electricians and plumbers and construction workers that are going to be in huge demand. That's also an area of the market that people underestimate in terms of wages.
Wages, again, as well as jobs being added. And that is huge. And we have not really seen that rollout begun. But, there's a few things that I think that the White House can focus on for 2026. And by the way, there's a lot of runway now between now and November 2026, to be clear here. But, focus on the issue of deregulation and what we're seeing in the financial services sector there. Look at what you're going to see as far as those jobs added in construction and other ancillary sectors with AI, but also, talk about, again, we've talked no tax on tips. Talk about the benefits for Social Security. You get a tax break for Social Security beneficiaries. You're also going to see overtime rules. All of those things are going to be in Americans' pockets. And also, we haven't really hit the retail sales numbers a lot, but I was going through that a little bit more. And I'll tell you what, you look back at the earnings reports for Gap, for Walmart, they were blowout earnings reports. So the consumer is there. The consumer is spending. They're just being particular. So all of this fear-mongering about the GDP for Q1 and Q2 and how the consumer is pulling back, I don't think the reality matches up with the commentary, I think, that is out there. So that's why I think I'm more than anything now looking at the data. Look at the numbers. That's the story, and it's a good story.
Alfredo, do you see the kind of stress that we're talking about in terms of people worried about the economy and their own cost of living? Do you see that in the numbers and the data that you're looking at?
Yeah, absolutely. I wanted to make the point on healthcare, Maria, because I think, there's been a lot of talk about the subsidies and stuff like that. But this week, actually, there's a very important vote that's going to be happening it's called HR 6703, the Lower Healthcare Premiums for All Americans Act. There's a couple provisions in there, but one of the most important and game-changing provisions for our small business owners is actually codifying the association health plans, which allows our small businesses, multiple employers to actually band together and have the same kind of purchasing power that large corporations will have. This is a massive, massive game changer. You got to remember, healthcare premiums for our small business owners are going up double digits every single year, 35, 40%. I mean, I can't tell you how many emails I am getting about these healthcare premiums for next year for our small business owners have gone up about 35 to 40%. Our premiums alone went up 40%. For Job Creators Network. And so getting these numbers under control and getting passage of the association health plan, for example, is going to be absolutely critical and a game changer. And then along with deregulation, lower taxes, I think this is why I think small business owners are going to be able to control that. And I think the employees of these small businesses are going to be able to participate now in the actual affordable healthcare plans. Because right now, just because they have access, as we know, doesn't mean it's necessarily affordable to them.
Well, the analyst that I'm looking at here from Headquartered ISI says that the December print in jobs is going to be the first relatively clean print after the shutdown. That will have a much much bigger bearing on whether the Fed might still cut in January, Mitch. I think that's an important point because the November number is a little noisy, got a lot of stuff in there. We're coming off of the longest shutdown in history, but the December number will be a clean print. Maybe that will be more market moving than what we're seeing this morning.
Most likely because it's all post the shutdown. However, all of the data, and this is the thing to remember with these jobs reports, all of the data from the previous 2 or 3 reports get revised, and we saw revisions up on the screen. So the December report could have big revisions to November and even October, and I think that'll be part of the calculus that the Fed has to deal with in January. But we'll have the unemployment rate, and if the employment rate continues to move in this direction, or even if it stays steady at this 4.6%, that is, again, above where Jay Powell said he was comfortable. That's going to put a lot of pressure on the Fed to cut rates again in January.
Cheryl, we're also talking about inflation every day, and we've got a CPI number coming out this week. Give us your expectations in terms of what this market is looking at when it comes to inflation, as we're looking at this graphic right now in terms of where the jobs are for the November report. And the most jobs were in healthcare and social assistance, up 64,000, Cheryl.
For CPI, the big, I think the eyeballs are going to be on the shelter cost, because we've been seeing shelter come down. If you continue to see an alleviation of the pressure, whether it's rent or it's mortgage payments, I think that's going to be what the market is going to really focus on for that. And, you know, again, the Treasury Secretary talking about inflation easing. That may not be until Q1, fair enough, but we haven't had, you know, decent CPI data either because of the shutdown. So but I'll be looking at shelter, also obviously be looking at wages in that report.
And of course, Treasury Secretary Scott Bassett just told us that he's expecting rents to go down. Lee, give us a sense from your standpoint how quickly sentiment can change. Hypothetically speaking, let's say you're right. Let's say these polls are right, which I'm not sure of. I'll be honest. I don't know about. I don't know if I'm buying these polls that everybody's so stressed. Things feel pretty good to me. But let's say people are stressed. When you get into 2026 and you see the impact of the big beautiful bill, and you see the impact of higher wages, and now you see job creation, and you see inflation come way down. As Cheryl just said, rents are coming down. Do you think sentiment on the part of the people changes significantly and quickly going into the midterms? How fast a shift could we see?
I think it could happen really quickly. I think there's a couple things that we're seeing. We're talking about those tax refund checks coming in. People are going to know that they're going to get money in their pockets. If people start seeing wage growth, if people start feeling all of these different things early in the year, there's no doubt that by the midterms, for sure, people will be feeling it. I think really from the time something rolls out until the time you feel it, there's almost a full year cycle. So the president's been in office for about a year. I expect over the next few months people to start feeling differently than they do right now. We've seen a continue pessimistic trend. I expect that to turn around.
Well, Mitch, what about you in terms of the backdrop and the stock market? Alan Greenspan used to have that term that he called the wealth effect. When you've got a market that's up in the double digits, which we do, don't people feel better about things, and doesn't that dictate behavior in their own spending?
I think it does, but, you know, for the average American who's invested in the stock market, they're doing it through their 401k plans or IRAs, and they don't really feel that as much because that's not money that they're going to spend, you know, in their working years. It's really money for their retirement. So I don't think that the wealth effect does anything, but it does lift psyche.
That's what I'm saying.
Yeah,
that's what I'm talking about.
So what you see is when the headlines are constantly about new highs in the stock market, that's when people buy cars. That's when they buy homes.
All right, great conversation, everybody. We so appreciate everybody's time. Joni Biley, Alfredo Ortiz, Mitch Rochelle, Lee Carter, Cheryl Casoni, thank you so much. We got a market that is lower this morning going into the open. The opening bell happening in about 30 minutes time. The Dow Industrial's down 42. Let's get right to Varney and Company. Stu, take it away.